We all know what the American dream is and how important homeownership is to the dream, but it seems like this dream died with the older generation. Here's how it happened. The real estate market in the US is facing some serious challenges, especially for young people looking to buy their first home. It's like navigating through a stormy sea with strong winds coming from all directions. Let's break down what's causing this perfect storm for young home buyers. First off, home prices have skyrocketed like never before. The pandemic stirred up a frenzy in the housing market, pushing home values to unprecedented levels. In just a year, home prices shot up by a staggering 18.6%, setting a new record. This surge isn't just a fluke, it's a result of long-standing issues like limited affordable housing and zoning restrictions, which have only worsened during the pandemic. Builders are grappling with rising costs and supply chain disruptions, making it harder to meet the demand for new homes. Now, add in the Federal Reserve's efforts to rein in inflation. They've pumped up interest rates to combat rising prices across the board, including housing. Higher interest rates mean higher borrowing costs for mortgages, putting home ownership further out of reach for many young buyers. Affordability is becoming a distant dream, especially when combined with the eye-watering prices of homes. And it's not just about the money. Finding a home to buy has become a real challenge. There's a serious shortage of available homes on the market, which means more competition and bidding wars. Picture this: you finally find your dream home only to get caught up in a bidding war with cash buyers and investors who seem to have bottomless pockets. The pandemic hasn't made things any easier. Remote work options have spurred a migration away from crowded city centers to more suburban and rural areas. This shift has put even more strain on housing availability in these already sought-after locations. Plus, disruptions in commodity markets have caused prices of key construction materials to shoot through the roof, adding to the overall cost of building new homes. So essentially, young homebuyers are facing a tough road ahead. High prices, soaring interest rates, limited options. It's like trying to solve a Rubik's Cube blindfolded. It's clear that policymakers and industry leaders need to step up to address these challenges and ensure that the American dream of home ownership remains within reach for everyone. Speaking of the American dream, the concept has always been closely tied to the idea of owning a home, a tangible symbol of success and stability that represents the promise of prosperity through hard work and opportunity. Back in the mid-20th century, the middle class thrived and home ownership was well within reach for many. During this golden era, stable jobs, increasing wages, and supportive government policies like the GI Bill paved the way for middle-class families to achieve their home ownership dreams. Buying a home wasn't just about having a place to live, it was about building wealth and securing a better future for generations to come. Back then, owning a home was almost a rite of passage, a sign that you had made it. Families could easily afford homes thanks to accessible mortgages and manageable down payments. It was even possible to rely on a single income to purchase a house, and the 30-year fixed-rate mortgage became a standard financing option. However, fast forward to today, and the landscape looks vastly different. The middle class, once the backbone of homeownership, now faces daunting challenges. Some will even say it is almost non-existent. The dream of owning a home has become increasingly elusive for many. Rising home prices have skyrocketed, making it incredibly tough for middle-class families to enter the market. In December 2022, the median list price for homes hit a staggering $410,000, a far cry from what it used to be. Even with a median household income of $74,580 in 2022, it's becoming increasingly difficult to afford a home at current prices. The rule of thumb suggests that buyers shouldn't spend more than 28% of their income on housing costs. But with home prices soaring and mortgage rates hitting a 2-decade high, many families find themselves priced out of the market or stretching their budgets beyond comfort levels. Delaying home ownership can have serious financial consequences, as it was once seen as a pathway to wealth accumulation. But for many middle-class families today, owning a home feels like a distant dream. A goal that requires substantial financial resources and perhaps a stroke of luck. In this new reality, the American dream of home ownership has evolved. While the aspiration remains alive, the path to achieving it has become increasingly complex. The middle class finds itself grappling with economic realities, rising costs, and shifting norms, wondering if the dream is still attainable or if it's now reserved for those in higher tax brackets. And the fact that baby boomers are not exiting the market as expected doesn't help matters. The notion that the real estate market will magically open up as baby boomers exit is a bit of a myth. You see, older generations, especially baby boomers, aren't exactly rushing to put their homes on the market just because they're getting older. The reason behind their housing decisions are more complicated than we might think. Let's talk about the silver tsunami idea that's been floating around. The thought was that as baby boomers, those born between 1946 and 1964, hit retirement age, they'd flood the market with their homes, making it easier for younger folks to buy. Sounds good in theory, right? Well, not quite. The reality is a bit more nuanced. Yes, baby boomers are getting older, but they're not all rushing to sell their homes at once. It's more like a gradual transition, like the ebb and flow of the tide, rather than a sudden tsunami hitting the shore. Why aren't they selling? Well, it's not just about downsizing. Many boomers need to cash in on their homes to fund their retirement. With the cost of living, healthcare, and nursing homes on the rise, they often rely on the equity in their homes to support their later years. Plus, many of them locked in sweet mortgage rates back in the day, and they're not too keen on giving those up by selling. And let's not forget the emotional attachment they have to their homes. There are memories tied to those walls, and it's not easy to let go. Some boomers also prefer to age in place, making modifications to their homes to accommodate their changing needs, rather than moving somewhere smaller. And family plays a role too. Some boomers want to keep their homes for their kids or grandkids, adding another layer to the decision-making process. But here's the thing, even if boomers do start selling their homes in larger numbers, there's still a ton of demand from younger generations entering the housing market. Projections show millions of new households being formed in the coming years, which means there's still plenty of competition for available homes. So it becomes clearer more than ever that the journey towards home ownership for future generations isn't as straightforward as it once seemed. While it's often assumed that as baby boomers pass on or downsize, a wave of homes will flood the market, the reality is a bit more complicated. First off, many baby boomers are choosing to stay put in their homes as they age. They've grown attached to their surroundings and are opting to age in place rather than downsize. This means that the number of homes hitting the market from this generation might not be as substantial as we initially thought. Plus, the homes they do release might not always match the needs and preferences of younger buyers. But it's not just about the boomers. Younger generations are facing their own set of challenges when it comes to home ownership. Economic shifts, changes in the job market, and financial conditions all play a role in shaping their ability to buy a home. Despite the desire to own a piece of the American dream, many are finding it increasingly difficult to make it a reality. One possible solution to this dilemma is the availability of financial products with lower payment requirements. While they might seem like a lifeline for first-time buyers, these products can usually worsen the problem. Reduced down payments can drive up demand, which in turn inflates home prices. Plus, buyers who opt for lower down payments might find themselves saddled with higher monthly mortgage payments and interest costs in the long run. It's a bit of a catch-22 situation. And let's not forget about the demographic patterns at play here. While Gen Zers may eventually inherit homes from the boomers, they might not be at the typical age for first-time homebuyers when it happens. Economic challenges and the need for significant updates to aging boomer houses could further complicate their prospects. So in a nutshell, the passage of homes from one generation to the next is a tangled web of economic factors, housing policies, and personal preferences. Solving the housing supply issue requires a multifaceted approach that takes into account both short-term affordability and long-term sustainability. It's like trying to untangle a knot. It's going to take time, patience, and a whole lot of effort to get it right. And of course, also watch this video here.